Public-private partnerships allow governmental agencies to access the expertise and the capital that the private markets have in the area of infrastructure. This ability to access both that expertise and that capital allows for efficient infrastructure rebuilds to be completed. And it really allows for an alignment of interests. Rather than looking at it in a very short term, in what we would call a traditional bid-build venue, in which the contractor is looking to provide the lowest possible bid at the day of bid opening, the 3P area really encourages all parties involved. At the end of the day, this value for money is really the driver behind both the viability and also the long-term success within the UK and Europe of the 3P platform. It's changing the mindset from low bid, day of bid, to a very much of a long-term view around the life cycle and the asset management of that asset over a 30 or 40-year period. The typical structure of a 3P has a concessionaire sitting at the center or the fulcrum of the deal. The concessionaire can be thought of as a developer, if you'd like to think of it in terms of a traditional commercial development type deal. Underneath or attached via contract, you have a design builder who will actually build the asset, and then you'll have an operations and maintenance company who will then operate that asset over the 20 or the 30-year life cycle. On the other contract directly to the concessionaire is broadly, I will say, the lenders. And the lenders on these deals can take the form of traditional bank debt, or they could take the form of bonds, generally private placement bonds. When 3Ps first began on the horizon in North America, there was a pretty equal split between bank debt and the use of bonds for financing. After the economic challenges we have run into in the 2007-2008 time frame, the financing has really transitioned more to a bond-focused type of financing rather than general bank debt. The protections that lenders are looking for are very similar to the demands of, in one sense, are similar to the demands of a normal governmental owner under a bid-build or a design-build arena today. They want the asset completed and functioning. The nuance under a 3P format and the nuance that the private financing brings to it is schedule becomes paramount. So, and as we look at that, the asset has to be put into place at a date certain so that asset can begin generating money to pay the debt.